What's all this? Are New Zealand, Australia, and Canada illegally taxing its citizens? New Zealand, Australia, and Canada are facing what could escalate into their biggest constitutional crisis ever. Information has come to light that exposes the income tax system for ordinary New Zealand, Australian, and Canadian taxpayers as being completely illegal. In today's episode, for simplicity, we are going to focus mainly on the New Zealand taxation system, but it applies in a similar way to Australia and Canada. We will delve into the history of how tax laws have changed and what has led to some successful challenges to paying tax. Keep watching till the end when I will talk about the source of this article and how you can gain access to that information for free. So, let's get started. There have been a handful of New Zealanders and Australians who have joined a movement, and they are expecting thousands more as news of their activities spreads. Collectively, they believe that as common citizens, they are not required to pay income tax on money they earn. Could this be true? To grasp if this is true, we first must look to how taxation has evolved. If you're enjoying this video, make sure to hit the like button and subscribe for more content. Also, leave a comment down below about what you would like to watch next, and I will do my best to provide content you guys want to know about. Now back to today's content. We start off with comments from American tax litigator Eddie Kahn, who has explained, on a number of occasions with tax officials around the world, because the law doesn't legally define the word income, it is left to the individual to define what their income is. For example, you could claim your definition of income is chickens, rather than money. Because the tax laws do not define what income means, an individual could well claim that to them it means chickens, or it could mean rocks, or whatever. What's really amusing about it is a tax agent will be perplexed, saying no, it's not chickens. And I say back to them, well, how do you know it's not chickens? You didn't define it. You see, when they say no, it's not, then they are obligated to show you what it actually is. And they can't, because according to their own laws, the word income has no definition. It's an approach the NZ and Australian tax offices have not encountered before. A battle with revenue authorities which puts them in the position where they have to prove what citizens' income is. This may sound far-fetched, however, it has been tested before. On what now amounts to thousands of occasions, and eventually cases have been fought and won by citizens. For Eddie Kahn, his Australasian research began in the 1990s, when a group of New Zealanders engaged him as a tax investigator to help them research the tax laws. Using the Auckland University Law Library, it wasn't long before Kahn had his first taste of New Zealand bureaucracy. He explains, a librarian came to us and asked if we were students. I said no and to ID her why we were there, and she said we'd have to leave. Kahn responded, is this a publicly funded research facility? And she agreed it was. Well, we're the public, Kahn said. These people with me pay your wages, and we're not leaving. As the American Eddie Kahn was negotiating, several of the group were actually packing up and intending to follow the librarian's request to leave. The librarian was confused and sought her supervisor's assistance. Upon speaking to the supervisor and relaying the same information, Kahn also added, if you can show me your legal authority to exclude members of the public from this publicly funded library, then we'll leave. Turns out the library couldn't, so the group was able to continue the research. What they were searching for was when did the tax laws first come to begin, and what powers did the legislation give the government? As we consider this, let's consider the findings of this group at the library in relation to how taxation started in New Zealand. For the first few decades of European settlement in New Zealand, turns out there was no income tax system at all. Colonial governments survived, like other countries, on customs duties on imports, as well as revenue from land sales to settlers. What developed over time was resentment from working classes. because wealthy landowners purchasing massive areas of land for what is the equivalent today of $6 an acre. This meant small-time farmers had only lower-quality land left. What impacted the most was, although the land was inexpensive to buy, the wealthy had acquired such massive areas of land that they couldn't afford to then farm the land. So they on-sold it at hugely inflated prices that working people could not afford. The then Governor George Gray stood for election as premier in 1877 on a premise of introducing a land tax, as Governor Gray believed the land tax would encourage large landowners to subdivide their land and sell to settlers at more affordable prices. As recorded by scholars B. Conliffe and W. Airy in the publication A Short History of New Zealand, which was first published in 1925. Large areas of land, held often by absentees, lay idle and impoverished for lack of capital. It followed that Governor Gray's land tax was introduced for undeveloped land. Unfortunately, cunning property owners found ingenious ways of deceiving the government and avoiding the tax. This persisted until what was dubbed as one man, one vote was introduced. This allowed ordinary workers to elect a government more able to effectively legislate against the wealthy landowners. So, in 1891, the then Premier John Ballance passed New Zealand's first ever income tax, incorporated in the New Land and Income Tax of 1891, directed primarily at land values and corporate activity. There appears to be no further evidence of a change to that act until 1908, and Eddie Kahn interprets the 1908 Act as implying the tax is voluntary. Yes, you heard correct. The tax was voluntary. Now, bear with me as we read the actual act as follows. Most gracious sovereign we, your most dutiful and loyal subjects, the House of Representatives in New Zealand in Parliament, assembled towards raising the necessary supplies to defray your Majesty's public expenses, and making an addition to the public revenue, have freely and voluntarily resolved to give and grant unto your Majesty the several duties hereinafter mentioned, and do therefore most humbly beseech your Majesty that it may be enacted. In 1908, New Zealand it now has the rudiments of a land and income tax, freely and voluntarily gifted to King Edward VII. The point that needs to be made clear is that it was a voluntary act for common people, the rate of tax being 1 penny per pound relating to land value, and 6 pence in the pound relating to income, which equates to about 3 cents per dollar. As the citizens voluntarily agreed to pay 3 cents per dollar to fund government services, the government garnered support. Naturally, you would expect successive governments to increase this very low rate of taxation. And true enough, over time, this rate of tax has increased over years. In fact, as bizarre as it seems, the rate of tax in New Zealand was as high as 98 cents in the dollar under Robert Muldoon. Government's penal rates in years to follow. The Muldoon era lasted for 3 terms of the Third National Government, from the 12th of December 1975 to the 26th of July 1984, and was famous or infamous depending on your view for its think big projects. An interesting side point, New Zealand enjoys the lowest cost of fuel being diesel. Petrol is more expensive. In Australia, it is the opposite. Why is this? Well, under the Muldoon government at the time, one of his think big projects was to build a petrochemical plant on the west coast of the North Island to convert crude oil into diesel. The reason was to make diesel fuel that was the lifeline for the cruising industry and trains to become more affordable, and hence to this day it is the cheaper fuel. However, I digress. Let's get back to topic. So, is it possible or legal that New Zealanders can opt out of the tax system using the same freedoms available to American citizens? Eddie Kahn and New Zealander Andrew Carstensen believe they most certainly can. Andrew Carstensen wrote an official letter to the New Zealand Inland Revenue Department under the Official Information Act in early 1998, In the contents of the letter, he requested the department to define what the word income is. What they wrote back in part was there is no definition of income in the current Income Tax Act, this being from the National Policy Manager, Margaret Cotton. The reply was proof in writing that the Inland Revenue Department doesn't have a definition of what income is, or they are not willing to say. The reason the Inland Revenue Department would not define the word income appears to be that all the various governments since the year 1908 have been keen to have their tax, NAT, spread as widely as possible and deliberately not defining key words in the tax legislation. Andrew Carstensen goes on to explain, when you fill out your tax return, it tells you to list your income. So, what exactly is income? The tax officials will not define what income is. They let you decide what you think income is and when you've made that decision yourself, which really amounts to you dobbing yourself in. By filing a tax return, he says, you are voluntarily telling the Inland Revenue Department you accept their jurisdiction over you. You agree you are a taxpayer, then it remains to determine how much tax. Let's recap her at this point. An individual has entered a contract with the government. Every act of Parliament has an interpretation section, and that spells out the meanings of key words and terms in the act. In the Revenue Acts, most definitions are prefaced by the word means. However, certain crucial words are not given an exact meaning, and this is where things heat up. Take as an example the definition for the word person. Person is defined as includes a company and a local or public authority, and also includes an unincorporated body of persons. However, note that at no point does the Income Tax Act specify that the term person to include a natural person, which is legal terminology for an actual living and breathing person. Nor does the Act even define natural person. This is despite the term natural person is specifically referred to under the definition foreign entity. It would have been extremely easy for the drafters of New Zealand's tax law to simply say, person means a natural person and also includes a company, etc. But why wasn't it written that way? Why doesn't the definition of person include natural persons? And does this mean that ordinary people don't need to be paying income tax? Because the legislation doesn't have a definition of wider scope, nor do the tax codes of Canada or Australia use the word means to define a person. Both countries use includes. Neither do those countries define a person as specifically including a natural person. Is this just an oversight, perhaps a simple mistake? You have 3 developed nations all having the same definitions for person, not defining human beings, surely. If those governments had the power to compel all citizens to pay income tax, they would have plainly outlined this in the law. In law where a government alters an existing common law right, the amendments must explicitly be contained first in legislation. If the government intended to make tax compulsory, surely it would be explicitly spelt out in the Income Tax Act. Compare the lack of definition of the word person with the very precise definition of natural gas in the New Zealand Income Tax Act. Natural gas means the gaseous mixtures of petroleum in a stabilized form which remain after the separation of crude oil or condensate from the well stream in the production facilities and which have not been subjected to further processing. The tax department is absolutely precise in defining natural gas, but fails to include natural persons in the definition of who is liable for tax, nor does the Act's Interpretation Act, which tells courts how to interpret legislation, shed any light on the person issue. Just as the U.S. Internal Revenue Service managed to fool 100 million Americans into paying tax by playing legal word games with them, Khan argues the New Zealand Inland Revenue Department's lack of definition for income or person is deliberate, leading to New Zealanders' common law rights being eroded. Now the idea to pay tax on ordinary employment earnings by coercement of the tax system under confusion of law, using the word includes rather than the word means, does not define it at all. When the Inland Revenue Department is asked, "Does this include anything else other than what was specifically listed?" they are unable to demonstrate there's anything else. Eddie Kahn says the following vital questions are unable to be answered. What tax am I liable for? What form am I required to file it on? Eddie Kahn continues, what it really boils down to, regarding the original 1908 Act, it's not even a tax, it's a contribution by companies to pay the public expenses of His Majesty. That's all it was for. It was freely and voluntarily given. That's not a tax, that's a contribution. Eddie Kahn claims the New Zealand Tax Department fails to officially require taxpayers to file tax returns. If they're required to file a form under law, it must be published in the Gazette. There must be a volume date and page number that this public obligation exists, and the public has to have public notice of it. It's never been published. There is no such requirement. The process if somebody doesn't file a form is they'll receive a letter asking, why didn't you file? In answer, there is no obligation to file. If there is, it must be published in the Gazette. In the absence of the volume date and page number, it is not a requirement. A New Zealand taxpayer, Jeanette from Taronga, is an example of someone who has successfully not had to pay tax on money earned. On April 6, 1998, the tax department wrote to Jeanette telling her she owed the New Zealand government $286.13 in unpaid tax. She wrote back, under the Privacy Act 1993, requesting what particular tax am I, a human being, liable for? And what particular form am I required to file for that tax? Please send to the requester copies of documents that evidence the liability, if any, as a human being, and also the evidence that links this liability to the particular form required to be filled out. I am a law-abiding citizen, and as such only require the specific facts as requested. I specifically request no opinions be given. In response, the Taronga Tax Office replied, as a person who is a New Zealand resident, you are liable to income tax on all your income, in this instance wages, interest, and rent. Person is defined in Section OBL of the Income Tax Act. I am aware that it is your understanding this definition includes just a company and a local or public authority, and also includes an unincorporated body of persons. But with respect, the definition also includes the word person. Person has the natural and ordinary meaning of the word. Jeanette wrote back, it is a cardinal rule of statutory interpretation that a word cannot be used to define itself. You cannot use the term person to define the word person. I'm sorry, but with respect, this makes no sense. This is also in direct contrast to the written response from Margaret Cotton, National Advisor, Operations Policy, on behalf of the Commissioner of Inland Revenue. Jeanette ultimately did not file a tax return that year, and instead wrote in to say she did not believe she had earned any income, as defined by the Act, and therefore was not required to file a tax return. Crucially, the Inland Revenue Department accepted her letter and refunded a $50 late filing penalty charge. It is no accident Jeanette was, as her son is accountant Andrew Carstensen, the head of New Zealand Rights Litigators, an offshoot of Eddie Kahn's American Rights Litigators. After more than 60 letters and Privacy Act requests of the Inland Revenue Department, Carstensen believes he has all evidence that income tax in New Zealand is voluntary. He claims his experience is if you ask the Inland Revenue Department a specific question, they'll give you a straight answer, somewhere in their reply letter, and then they'll spend the rest of the letter saying what they've just said is not right. Another point to be made is that amongst information that came from Carstensen's communications requesting further definition, it comes to light there is also no requirement for taxpayers to have a tax file number. You heard it right. There is no law requiring you to have a tax number. Carstensen, Eddie Kahn, and others believe this provides a major clue as to the voluntary nature of income tax. Kahn argues that if the government had a lawful right to tax natural persons, it would have made tax numbers compulsory. Instead, you are given a choice. You can comply or not. But the government knows it has complete control over companies, and has instructed companies that where a worker chooses to exercise their legal right not to provide a tax file number, that company is required by law to deduct a flat rate tax of 45% from whatever that worker receives. The tax is imposed on the company's wage expenditure, not on the employee. Those who voluntarily accept the IRD number will face tax deductions as low as 19.5% as a reward. A similar voluntary carrot and stick approach was adopted by the Australian government in the late 1980s. In its ill-fated bid to introduce a voluntary national ID card, Australians were told the card was not compulsory for natural persons, but that businesses or banks who traded with a cardless person would face fines of up to $20,000. In a second letter, the tax department said that although it was not compulsory for anyone to have an IRD number, failure to provide one meant the person concerned would not be permitted to file a tax return or claim back any overpayment of tax. So here are two important points. You are not required by law to have a tax number. If you do not provide one, you cannot file a tax return either. Now comes a vital point. You have asked if you can give up an IRD number and close your account if you wish, wrote the Inland Revenue Department's David Belchamber. I can advise that IRD numbers are normally issued for life. However, the number can be closed off if it is no longer required. In other words, even if you have an IRD number, you can return it and close your account with the tax department. This is not what you'd expect from a compulsory tax system, or do the rules only apply to those who choose to become taxpayers? The growing tax revolt in New Zealand, Australia, and Canada is raising public awareness of that difference. The New Zealand government is taking nearly 40% of what we the people are earning. So, if this is the case, why doesn't the government simply change the law so that all natural people have to pay tax? If they do, then they're admitting that previously a natural person did not have to pay tax, and the Inland Revenue Department would be faced with refund claims for all the years they were taxed illegally. Eddie Kahn says it's a wake-up call. I think that New Zealanders need to take control of their government. And the way you do that is by telling your MPs, no, you have to get into this mentality, I pay your salary. You're there for my benefit, not yours. If you're not benefiting me, then I don't want you there. You are really in control, as long as you exercise control. If you don't exercise it, the politicians will assume it for themselves. Carstensen expects the New Zealand government to utilize constitutional lawyers to try to play down or rubbish the existence of a problem. The government, through the news media, has to try and convince the public that there is no crisis and no power vacuum. In the 1980s, the citizens of California brought their government to its knees in a tax strike. Ultimately, New Zealanders, Australians, and Canadians are yet to test similar power. But the knowledge that the United States Internal Revenue Service is allowing Americans to opt out of the tax system is likely to put incredible pressure on the former British colonies and the constitutional void appearing to surround them. So that concludes today's episode. But before we go, I did promise that. For those that want to know all the detail, I will provide the source information for free. Well, I have linked that in the description of this video. If you are interested further, I recommend you research that information. It is a real eye-opener and has a wealth of detailed and technical information that we simply weren't able to cover in this video. Leave me comments if you found that information helpful and what topics you would like me to cover, and I'll see if I can provide coverage of that for you guys.
Thank you for listening. Please join me next time when we will delve into another episode.